Good morning and welcome to Trading Futures, another great webcast from Schwab Coaching. There's the opening bell. That means it is the cash market up and running. We'll see how that impacts the futures market, which has been up and running for a little bit this morning as well as overnight. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I am joined out there in the chat by my good friend Brett Crowther. I almost said Brent Morris, who's also a good friend and also knows the futures market as well as Brett does. But Brett's going to be helping to answer your questions along the way. Be a part of the conversation. Chat in some questions throughout the conversation here today. If you're joining us in the recorded version, leave a comment for us in the comment section. We'll get back to you as quickly as we can, but just be a part of the conversation. It's kind of fun. And we're grateful that you are here with us, whether you're here in the live version or the recorded version. Doesn't matter. We're glad to have you with us. And as we get started this morning, a couple of things moving. Gold seems to be on the move a little bit, at least at the start this morning, as well as some of the cryptocurrencies. And I've got some new stuff to show you, which is kind of cool, I think. So let's get into this. Couple of quick housekeeping items. Remember that everything we talk about is simply for illustrative and educational purposes only, not a recommendation of any kind. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading any futures products. Remember that futures trading requires separate trading authorization. Also, remember that futures margin is a means of accessing the futures market, and that is changeable. Those futures requirements can change, and so that is one of the things that we will discuss along the way here. Again, when we talk about any specific symbols, those are for illustrative and educational purposes only. We're going to use technical analysis in this discussion. It is not the only way to look at the market. It's simply one way. It is theoretical in nature, as are fundamental analysis, probability analysis, both. Schwab doesn't recommend the use of technical analysis as the sole means of investment research. Now, when it comes to virtual currency derivatives, like some of the ones I'm going to talk about today, some of the new products that are out there, remember that those involve unique and significant risks. So please read the NFA Investor Advisory on futures on virtual currencies, including Bitcoin, and the CFTC Customer Advisory, Understanding the Risk of Virtual Currency Trading. Remember that those virtual currency derivatives, virtual currency is a digital representation of value that functions as a medium of exchange, but it does not have legal tender status, at least not yet. So virtual currencies are sometimes exchanged for US dollars or other currencies around the world, not currently backed nor supported, even with stable coins, by any government or central bank. But that is coming, I think, perhaps soon. So not necessarily, who knows? We'll see. But just keep those risks potentially in mind. Now, we're going to be using the Thinkorswim desktop software platform here today, specifically the paper money version of that platform. It's a great way to learn. It is a great learning tool and sandbox to play in. It is not, however, a guarantee of future success out there in the real world, number one. Number two, it does not do certain things that a live trading account will do. Namely, when it comes to options, doesn't facilitate the early assignment of short options. And when it comes to studies and scripts and things like that, does not allow studies and scripts in scans. There are some other differences as well. Fill prices may be different. So just keep that in mind as you move your trading and practice from paper money to live trading, that there are going to be some differences. Now, one other thing that I want to pay attention to here when it comes to trading futures, of course, investing involves risk, but the bigger thing here is that stop orders, and in fact, any order that generates a market order, whether that's a stop or stop limit, buy stop limit, any stop orders that generate a market order, those market orders may and oftentimes will be substituted by the exchange for an exchange designated limit order instead of that originally triggered market order within a specific range of price that is oftentimes referred to as protection points or protection range. If price moves outside of that range, those orders may not fill, or they may be rejected. because of a fast-moving market, and that is simply for the exchange protection and traders protection as well. So just keep that in mind when we get to talking about stops when it comes to futures products. So let's do this. Let's pop over here to the Thinkorswim desktop software platform. This is my paper money version, and I put this trade on earlier. And what I want to do today, and I know I read your comments, and I appreciate your comments very much, and we read all of those in those feedback surveys. We don't have a feedback survey yet out there in the chat this morning, but we might. And one of the comments he said was have more trades that we put on during the class instead of putting on ahead of the class. So I'm trying to balance that out. We're going to do both here today in this discussion. The one trade that I did put on ahead of the class so that it was right here ready to go was this trade on /MGC. This is the micro gold futures contract. And gold, you can see on the left-hand side of our grid here, if I zoom in, you can see that gold has made that run to the upside, but it has been on really kind of an unabated, almost unabated downward trajectory over the last few days as it has really pulled back. That retracement, that sell-off, rebasing, whatever you might want to call it, has been a pretty significant pullback to the downside. And so that has been, a significant change for a lot of investors, both futures traders as well as in the equities products surrounding the gold market. But I happened to notice this morning as I was taking a look at this on the 5-day 5-minute chart, or actually the today 5-minute chart. And I'm going to bump over to this particular side, and we're just going to make that the larger view. And I saw that rally up, and then as I started to look at this morning when I was getting ready for my hit this morning on the Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions, starting to see this little bit of a rally off of this support just above the 3,900 level on the futures contract. And this is the micro contract. We'll talk about the size of it here in just a minute. But I wanted to walk through what this trade was doing. And it was giving me one of these kind of off the bottom with some strong momentum bounces. And, starting to see if we let's put our line tool on here, pretty solid move to the upside in momentum. And I saw it run into this resistance level that was created by this support level back here. We saw that a little bit of a support bounce, and then it fell again. We saw the support bounce just kind of off of that discrete bottom, kind of side-by-side candles here. And then it rallied off that level and back up to this resistance. That became my kind of threshold, my Rubicon for this price to cross, because it tested it once, it tested it twice, it tested it 3 times. Once, twice, 3 times the resistance. Came back up to it, and this is where I put the trade on as I was starting to get ready for this class this morning, was right here. And I put the trade in as a buy stop, and the trigger for that buy stop was price on this futures contract breaking actually above 39.45.40 was the trigger. So we got that break on one candle, and it stayed there above that resistance level, pulled back a little bit. So here's how I lined this trade out. Entry was above that 50 or 39.40. Where do we put it? 39.44.5. And so that's my entry line. My stop is down here. So taking the trade off, we went long the futures contract here. Taking it off if it went below the 3,900 level, and taking it off if it goes up above 43.05. Now, for those of you who have not been in this class before, we're certainly glad to have you here, and I very much appreciate all of the new folks that are here as much as I appreciate the regular suspects that are here on a regular basis. So we're glad to have you here. But one of the things that we do with the shorter term intraday trades, at least in this discussion of this futures trading webcast, is we'll set the trade up with an entry signal, a target based on technical analysis, and a stop based on technical analysis. And so we're starting to see that move here. The goal was, in this particular case, to see this move to the upside, back to that previous resistance level in the overnight hours, taking it off if it goes against me. So to really kind of line this out when it comes to the reward to risk, because I know that this is a question that a lot of traders ask when we put these trades on. This level right here is our reward. I'm going to make that a big R. And this distance over here is our risk. And I'm going to make that a smaller R. So this is reward, this is risk. Potential reward. So you can kind of see visually how this lines up. That's about 2 to 1. Maybe just a little bit more than 2 to 1 risk or reward to risk in this trade, potential reward. No guarantees that it'll get there. In fact, it's kind of backing off and going sideways a little bit. So what I was also looking for, and I didn't put it in as a condition for the trade, was a positive momentum bump here when it broke through. It had it. I was looking for that. I wasn't putting that in as a condition for the trade, but that is a condition that can be made for that entry into the trade by making it a buy stop order or a conditional entry order, buy stop with a condition. And we could create that. The condition might be positive MACD. And again, paper money doesn't allow you to do that. Put a study in as a trigger for an order. But a live trading account does. And so you can create that conditional order set that would say, yeah, give me a breakout and a momentum bump, a positive momentum indication before entering the trade. Else wait. If this, then that. Else wait. So that's kind of where we are. Now we got that. It entered. It had it. I didn't put it in as a condition, but it had that momentum bump. Now we're starting to see that back off a little bit here. And this is the reason why we manage risk in these short-term trades, because there's really kind of, again, that element that this is a speculative trade. It's not really establishing a solid trend direction yet. It's making roughly equal highs, not yet higher highs when it makes that trade. It's making higher lows, but that trend direction is really not yet established. So it is a speculative trade. And you're right, Kevin. It's kind of bumping its head on that $1 move. What I want to do really quick, let me kill these annotations. We'll pop back over here to the longer term chart. So this is the right-hand side of my futures movers grid. The left-hand side is the 1-year daily chart with a CCI, that kind of, again, pressure indicator. What's the trend strength? And really the trend strength here is kind of backing off. But again, that's lagging a little bit behind that short term. The CCI is going to lag. This is a 1-day chart. This is going to lag behind those intraday candles. But I'm going to zoom in a little more closely so we can see where this is. And in fact, I'm going to zoom in kind of right down here so you can see where that entry signal was. The entry signal was at the bottom of the candle. The target is kind of right in the middle of yesterday's candle or last trading session's candle, maybe just under that. That could potentially act as a resistance level. And my stop was right off of that low. So this was not without. Let me grab the slider here so you can kind of see that a little bit better. So right off that high, right off the bottom of this candle, and right off the low, that's where we were putting that trade together off of that level. Now, notional wise, let's talk about the size of this. Tick size is 0.1. That means this digit right here to the right of the decimal is our significant digit. That's going to move in 0.1 increments, in 10th increments. So it's going to go 1, 2, 3, 4, 5 instead of 0, 5, 0 or 0, 2, 5, and so forth. That increment is 0.1. The tick value, every time that ticks, that's a buck. Every time this changes, since there's 4 of those ticks in a point, since that's one to the right of the decimal, every time this number right here changes from 7 to 8 or 8 to 7, or to 7 to 6, whatever that would be, whatever those numbers are, that's a $10 change. That's a full point value of $10. So $10 times this number, what that is currently priced at, what the contract's currently priced at, gives us our notional value in the contract. Now, why is that important? That tells you essentially the not control, because we don't control anything here other than our risk in the trade. But what that says is the representation of the value of this contract, what this contract represents, that notional value is 39,362. Now, what that means then is generally the higher that notional value, that is going to be a higher margin requirement in terms of the initial margin and then the maintenance margin. So what we're going to do is we're going to come back here to this drop down, and I'm going to go to the futures sub tab in that drop down, and we're going to look at /MGC, our micro gold futures. And our initial margin in this trade is $2,200 per contract. That's what we have to have available and dedicated to this trade to be able to initiate this trade. Now, that will reduce once we're in the trade to what's called maintenance margin. But if the price of the contract starts to move against us and we don't have enough cash in our account to meet that maintenance margin, then we're going to get a margin call that's either going to say add cash or liquidate the position, or we're going to liquidate the position. So that's where we get that idea of that margin call if the trade starts to move against us, and where there is that potential for loss. Now, that's again, you can kind of see we're kind of right in the middle of these micro contracts here. That's an important consideration when we talk about the risk. If we were going to look at the big contract, and I just want to show the disparity here, /GC, the disparity here, the big gold contract, you see that the notional value here is 10 times that, 394,290. Tick size is still the same. Tick value now goes to $10. So every time this changes from 2 to 3 or 3 to 2, that's going to be $10. And then the point value is now 100. So every time that moves from 4.3 to 4.4 or 4.3 to 4.2, that's $100. Times that price right there, which is the price that we were seeing on the contract, that gives us our notional value. And if we were to look at what our initial margin is, 22,000 times 22,000 is our initial margin. Remember, our /MGC was 2,200. Now, there is another product in here when we're talking about gold, and this is a new product, and this is going to lead me into our new discussion, our discussion of new products. This is the 1 ounce gold futures. And if we click on /10Z, tick size is 0.25. So you notice that this now is a little more granular, sort of. Tick value now is 25 cents. Point value, still $1. So when this changes, that's still $1 change, but the tick value is higher. The notional value, if we take that point value times this price, notional value is $3,945. So smaller, much smaller notional value. In fact, a tenth of the micro notional value in this 1 ounce gold futures. And we look at our initial margin into this particular contract, $220 per contract. So think about that in terms of utility within a portfolio. To gain exposure to gold movement for an initial margin of $220 may be more capital efficient. Now, thinking about in terms of the gain, yes, the gain is going to be smaller. Yes, the loss potentially could be smaller. So in terms of those returns, absolute returns, that's going to be a smaller gain and smaller loss than the bigger contracts. But at the same time, perhaps being more granular. So if you were going to trade, say, for instance, 10 contracts of the 1 ounce gold futures, that would be equivalent to the notional and the margin, theoretically, of the /MGC. But that would give you granularity in terms of peeling off some of those contracts. So there is some utility to these smaller contracts besides just that small initial margin. They can be a little bit more granular in terms of trade construction. So since we're talking about that, what I want to do is I want to do this. I want to pop over here really quickly to schwab.com/futures. And so this is a good landing spot if you want to learn more about the futures market, if you want to learn more about futures trading at Charles Schwab. And for the futures market, you've got introduction to futures, you've got futures markets, you've got some of the characteristics of those markets, you've got links to things like this webcast, you've got links to static education, but then you've also got this link to daily futures commentary. And this is the reason I want to pop in here. So we're going to pop in here to Reading Futures Insights. This is done on a daily basis throughout the week, the futures commentary. Chris Waterbury, one of the futures trade guys, puts this out, as well as a few others. But he'll go into technicals, he'll pick particular areas. But the reason I thought this one was really interesting is because down here at the bottom, he highlights this, the new contracts. And so we've got /XRP, which is Ripple. But what's really interesting, given what's going on in terms of the ag markets recently, is now micro contracts on corn, wheat, soybean oil, and soybean mash. And why do you care? Why does anybody care about soybeans? Well, because this soybean oil, soybean mash, soybeans themselves, that is one of the major agricultural products that is at the heart of the trade deals that are going on right now. Aside from rare metals, other countries buy lots and lots and lots of soybeans from us, whether it's in oil or meals. So this gives us an opportunity to expose portfolios to potentially some of those areas. There's that 1 ounce gold future. /SOL and /MSL, those products are now newly available across those contracts. So let's pop over here and let's take a look at a couple of these as we go back. By the way, this is a good opportunity. Since we're already out here in this page, I want to show you this really quick. If you want to learn more about trading futures, or you want to learn more about trading any of the other strategies that we talk about, pop on over here to Trader Talks Webcasts on YouTube. So youtube.com/@Trader Talks Webcasts. We have one ask when you come over here, and that is just click on this subscribe button if you haven't done so already. But you just type in here futures and margin. Let's type in futures margin. And now you're going to get webcasts that talk about futures margin. Brent Moore's talking about it. James Boyd talking about it. I'm talking about it. Brent Moore's. I'm talking about it, James Boyd, and a few others. So you're going to see a bunch of information about a particular topic. If you want to learn other topics, type that into that search box. And so it's a great discussion, a great learning resource to be able to follow along. All we ask you to do is click on that subscribe button, give us a follow. All right, let's pop back over here to the webcast, or to the Thinkorswim desktop software platform, and I wanted to take a look at first of all, now that we've got that trade going, let's pop back over here to our /MGC and see how that trade is lining itself up. It's turned back around, kind of came back up off of that bottom, so it is working at the moment. I'm going to pop this back to its full grid view, which means that I'm going to now restore these cells. I've got side-by-side 1 year daily and today's 5-minute chart. So I wanted to go through some of those new products and see if there is anything that we could find within there to trade, just because I'm interested to see how these trade. I have not yet traded these contracts in this class. So I wanted to kind of see how those came or how these are moving. So I'm going to scroll down through this list. So the first one that pops up with me, we talked about that /M or that /10Z contract, the 1 ounce contract. But here is the micro Sol or micro Solana futures. And if we were to take a look at /SOL, Solana is a stable coin. Again, remember, anytime we talk about virtual currency derivatives like this, you got to pay attention to the fact that there are additional risks associated with the fact that these are virtual currencies. But again, that's one of the reasons why traders may access them via the futures market, because that's a known quantity. Whereas some of the exchanges and things and some of the ways that these coins and cryptocurrencies are traded may not be known quantities. So this is the full-size Solana contract. Tick size is 0.05, so that becomes our significant digit. Tick value is $25. Point value, so every time this changes from 203 to 204 or 203 to 202, that's $500. The notional on this particular contract, 101,575. If we pop down here, our initial margin is almost half that notional. And again, I think that's a reflection of the potential risk and some of those risks associated with these cryptocurrency products is the fact that those initial margins are reflective of a little bit of that additional risk. Gold contracts, we know that the gold market's been trading for a long time. Solana futures, not so much. So that those initial and maintenance margins may be higher. /MSL, which is the micro Solana. The comparison here is, again, tick size, same tick size. Tick value is smaller. It's $1.25, so a tenth of that. Point value, $25. And that's that's a tenth of the point value of the larger contract. Notional is 5,077 in terms of the notional value. And if we pop down here to our /MSL, initial margin 2,315. So same percentage wise in terms of that initial margin. It's just a smaller contract, so it's a smaller initial margin in getting into the trade. But again, that's going to be reflective of some of those potential risks in these crypto futures. So let's kind of pop through some of these other contracts and see if there's something that is tradable within this space. So we'll kind of scroll down through this list, kind of in the middle in this list of those minis or micros. So there's micro Sol. Let's take a look at micro corn /MZC. And on the today 5-minute chart, again, this is a function perhaps of liquidity. Again, remember, these started trading, especially these ag products, started trading just recently. So in terms of developing some of that intraday liquidity, you're not seeing a lot of that intraday liquidity yet. It's growing, and that's why you're going to see these flat lines, because you have time periods that are occurring when there are no trades occurring. Now, it's starting to pick up a little bit here as we get into the cash market for the equities, and we're starting to see some bullish momentum here moving, and in fact, maybe a little bit of a push to the upside here in terms of that breakout. Let's take a look at the contract, maximize sell here, and we'll look at the contract itself. Tick value is that 0.5, so it's the decimal, but this is tick size in terms of 0.5. So this is going to go from 0 to 5 to 0. Tick value is $2.50. So every time that ticks, that's $2.50. Point value is $5. And the risk or the notional value in this contract, $21.62. So it's this price times the point value gives us that notional value. And if we pop the drop down to that micro corn futures, $107 of initial margin. This is the difference that I'm saying, right? So this contract, not that much difference in terms of size and of notional value than the micro Solana contract. But the micro Solana contract required about 50%, almost 50% of the notional in terms of initial margin. This one requires $107 against $2,162 of notional So that's a better impact of leverage. So reduce leverage in some of those micro contracts in the cryptocurrencies because of the additional risk. Greater leverage here in these contracts where there is a known quantity in terms of corn futures. Corn futures have been trading for decades, centuries, perhaps. But my thought was, in looking at this from this standpoint, is that maybe we could put this to the test for a longer-term swing trade, maybe intermediate to longer-term swing trade. I'm going to zoom back out on this chart. You can see how long these charts have been trading. This is really back to, in this case, the /MZC, this corn contract, back to, what is that, May 1st? And we see where that is right there. So that's the extent of this particular contract. So what I'm going to do is I'm going to look for this to maybe come back to one of these resistance levels. I'm going to kind of split this difference right here. I'm going to call that 444. I kind of like the round numbers. I know fours are unlucky numbers in some countries, but that happens to be one of my lucky numbers, four. So I like that symmetry of that 444.4. So what I'm going to look at doing here is going long. Not that luck has anything to do with this, but it's just simply, traders are superstitious, right? Brett Crowther is not superstitious. He's just regular-stitious. But that's a joke, I say. It's a joke. Nobody got that. Wow. Brett's laughing right now. I know Brett's laughing because yes. All right, so here's what we're going to do. We're going to look at trading this to the upside. I've got a level of support down here. I might come back in and manage that risk off of that 423.7 level, kind of that resistance. And I'm going to look at getting into this trade and taking that swing trade up to this next level of resistance. Now you're laughing. Thank you. Come on. I know it's early in the morning. I get that. I totally understand. So what we're going to do is we're going to right click and we're going to buy custom with OCO bracket. We're going to put this trade together. We're going to look at getting into the trade right now. And again, we're going to do that with a limit order. But remember, a limit order is going to trigger a market order. So that's going to be worked as an exchange designated limit order. So I'm going to look for my target up here at 444.40. So that's going to be a sell limit. So if the price of the stock or the price of the futures contract does make a big move to the upside, it's going to get triggered at 444.40. It may fill at a different price. I'm going to make that good till canceled. I'm going to make my stop, in this case, at 423.80. And we're going to risk a little bit in this trade, 423.80. And I'm going to make that a stop. Now, remember, that stop is going to get worked. If it's going to trigger a market order, that's going to get worked as an exchange-designated limit order, triggering at 423.80, but not necessarily filling at that price and not necessarily filling at all. And then I'm going to get into the trade. It's currently, a futures contract is currently trading at 432.50. So I want to give that a little bit. I'm going to give that to 432.70 to get into the trade. That's a limit order which says buy it at this price or better when you're buying is less. And so we're going to look at trying to get into this trade right here. I'm going to click on confirm and send. Oh, that's right. Hey, good point. And that's a good alert. And I'm glad that this brought this up because our tick size is 0.5. I can't put in triggered orders at those non-5 increments. So I'm going to put that in at 432. Actually, I'm going to go 433 even. And I'm going to put this at 444. That messes up my symmetry, 444.50. And we're going to put that stop in at 424.50. Now that we've got those in 50-cent increments, I'm going to go ahead and I'm going to click on confirm and send. I'm going to read through this order. And that's a good alert. And it's a good idea to always do that. Read through those. Make sure that you're aware of those alerts, transaction costs, and so forth in place here. We're going to put this in our futures group. And we're going to go ahead and we're going to click on send. And we're going to fire that order off. And we'll see if that fills. We're within the limit here. We'll see if that fills. And again, now it filled. It took a little while. And again, because that is a function of that is a function of the liquidity of this contract on the intraday basis. So it took a little while for that to fill, whereas with the larger contract, it may very well have filled as soon as we push that button. But it is moving to the upside in this particular case, and this is more of an intermediate term swing trade. Let me label this just so that we can remember when we come back that this was our entry. This is our target. And this is our stop. And I like to just do that on these charts just so that I remember not only the direction that I was going, but also the, Carol, you guys saw me last week not reading the order, and you saw the impact of that, or 2 weeks ago. So there's that one. That's micro corn futures. And as we roll through here, we've also got micro soybean. We've got micro soybean mash, which is the meal. We've got soybean futures themselves, and you can see the corresponding contract sizes and initial margins. Let's go to those soybeans. This is the /MZS, and it is rocking and rolling, not necessarily on a daily basis, although it is right now, and this is trading with a little bit more intraday liquidity as we start to see this rolling here. But once again, this is kind of breaking out. So breaking out today, in fact, if we kind of put this line, and again, like I said, this is one of the things that is exciting about the fact that this micro product is available. And I have to disclaim this once again, is the fact that my excitement should not be construed as a recommendation. My excitement should be construed as me being a futures nerd, kind of like Brett Crowther. And getting excited about the fact that now you have micro soybean futures that are a little bit smaller notional value and smaller initial margin, but it gives access to an exposure to that market that is, like I said, at the heart of the trade deals that are going on. So this is kind of blowing through the stage. So the intent here in this particular case, Sharon, is not to close. These are more intermediate term swing trades from support to resistance or resistance to support, not necessarily intraday trades. Intraday trades, they're shorter term trades. Yes, I'm looking at closing those out within the day. These on this hand were, because again, that's one of the reasons why we're looking at these in the micros, because that initial margin and maintenance margin is smaller, that I'm looking at taking these over multiple days, looking at making those moves from levels of support and resistance to other levels of support and resistance. So we don't have anything overhead here. So you know what I'm going to do really quickly to get a sense of where there might be resistance. And this is where it is interesting. And you know what I'll do? Let me do this. I will do this. I will share my workspace. Give me 1 second. I want to look at /ZS. This is the larger soybean contract. And you see the notional value here. And I want to go back multiple years. I want to go back to, say, for instance, a 3-year weekly on this contract, because I'm not seeing any resistance level on this daily chart, the 1-year daily chart. But I do see some resistance up here around that 131. So if we were to draw that line in here, 131, or excuse me, 1133 on the big contract. We don't have that on the small contract yet because we don't have that history, because the small contract hasn't been trading that long. But this is what I'm going to use as this next level is up around that 1133, 1134. So now if we come back down, /MZS, the small contract, we don't have that time frame here. I'm going to change this back to a daily chart, 1-year daily chart. And I'm going to kind of squish this up, and I'm going to say, all right, where is 1134? That's right about here, 1134, and I'm going to draw a line there. So that's based on that weekly resistance on the longer term contract, the bigger contract. But we're going to look at trading this one, and I'm going to look at taking this trade off if it breaks below this level of support right here. So we're going to do exactly the same thing. We're going to look at getting in, right click, buy custom with OCO bracket. I'm going to take the trade off if it goes up to 1134. So we're going to put that in here at 1134. and I'm going to make that good till canceled. I'm going to take it off if it goes down to 1,061. 1061, and I'll leave that at even, so that, because remember, I've got a 5-cent tick size of 0.5, so I've got to be within that increment. And then it's currently trading at 1,100, so I'm going to give it a little bit, and we're going to come back and we're going to have to readjust those. So 11, I should have done this one first. 1101 as our entry price. So I got to come back here and I got to adjust those, because that's going to change my target, my stop. So we said 1134 even, and 1,061 even. Enter. And now we've got our order in place, and we've got some headroom for this to get into the trade. I want to give it a little bit on that limit to get into the trade. Remember, that's going to be worked as a market or an exchange designated limit order, because it's creating a market order. Click on confirm and send, read through the order, make sure that that is what I want to do to open that contract going in a bullish direction. I want to sell it above, sell it if it goes below. Transaction costs I want to be aware of, and I'm going to put that in my futures group and click on send and fire that order off. And we'll see if that order got hit and filled. Interesting. Okay. So another circumstance where we went long and it filled right away, even though my target was up here and my stop was down here. So I'm going to have to pay attention to that and see how that works. That may be a paper money issue, but we'll see. And I'm going to work through that. And we'll talk about that in terms of that discussion. I may have misentered the order. But let's go over to the monitor tab real quick. I know we've got just a second or two here to talk about this. Let's go back here to the monitor tab and let's take a look at that working order. Whoops, here we go. Activity and positions. Let's see our filled order here, and it sold to close. That was our to open contract, and it sold. Why did it sell at that 1,100 on the stop? That's interesting. Okay, I'm going to have to track that one down. I'm going to have to track that one down and see why that sold at that 1,100 level on the stop, if I had misentered the stop order or not. So I'm going to track that down. I'll have that for you next week as we talk about this. But really quick, those are those new contracts that we talked about. Here's where you can find the list of those that we talked about. Come back over here to schwab.com/futures. Go to learn. Here are the new products: Ripple, Micro Corn, That sounds like a drink, doesn't it? Micro Ripple. It is, well, we'll talk about that later. Wheat, soybean, oil, meal, 1 ounce gold, Solana, and Micro Solana. So we put on a couple of trades there, and we will see how those play themselves out. Again, thanks to Brett Crowther for helping out. Join us over here on the Trader Talks webcast for more information. Click on subscribe and click on like if you happen to like this webcast today. My thanks to Gabe for helping out bringing the production to you, and Mindy and Nikki and all of our reviewers and everybody that helps to make these sessions available to you. And thanks most of all to all of you for being here and talking about futures this early in the morning. A lot of great webcasts coming up today. And I will be back tomorrow teaching index options tomorrow afternoon. We'll see you then. Take care, everybody. Bye-bye.